Welcome to Your Bookkeeping Matters. I'm Lisa Turner, bringing you short and snackable weekly episodes on bookkeeping and business matters in an easy to understand way so you can be in control and confident that you know your bookkeeping matters. Let's dive into this week's episode. Oh, hi there. I'm really excited to have you tune into this episode, which is kind of by popular request due to this question a lot from new clients, in communities, and in general, what happens when you don't keep accurate records? And by this, I mean business and financial records in your business. Now, I've thought long and hard about the main points I wanted to share with you in this short and snackable episode because the flow-on effects are almost endless because when you think about it, nearly all you do in your business is somehow tied to a financial decision, payment, or transaction, or path, or journey. Money might not be the actual reason you do something, but it will have some financial impact and you need to keep records of it. So let me start at the beginning. With the main and obvious interpretation of this question, let's look at spending money. What happens when I don't keep all my tax invoices or receipts? First and foremost, you can't claim either the tax deduction or any related GST if you're registered for GST yourself without keeping accurate records and invoices for what you've spent the money on. It's one of the rules to claim the expense. You must provide and keep written evidence for all the expenses you claim. There are, of course, some exceptions, but we won't go into those today because as best practice, so in the first instance, you should always keep every single receipt you want to claim. And the ATO does not care if this is paper, hard copy, or electronic, digital. We are a completely paperless office here at Accounted for You, my bookkeeping practice, and we only work with digital copies. We let our clients choose if they want to retain the original hard copies they've got or not. But if you only have a digital copy, don't waste resources by printing them out of habit or thinking that you need to for the ATO because you don't. And we love sustainability here. So you also can't enter them and chuck the receipt in the garbage or delete the email records because you need that written evidence. You need to keep it. Your tax agent might have questions when doing your tax returns. Your bookkeeper will need the copies to process them for you. And touch wood, let's hope this doesn't happen. If you're audited, you'll have to produce any and all that they ask for or face some really hefty penalties. Depending on the circumstances, when it relates to, there are different penalties and things that apply, and they are in the thousands and can add up really fast. And guess what? You can't claim any penalties that you have to pay as a tax deduction. Now, if you have those receipts or invoices stored digitally, chances are you'll keep them forever and a day. But you only need to keep them in most cases for 5 years from the date that you lodge your tax return for them, not the date of the expense. When I say most cases, sometimes it's longer than 5 years. So check with your tax agent if you're not sure how long you need to keep particular documents for. And if you're getting audited for something like fraud, the ATO can go back as far as they like. But in today's digital world, it's really easy to keep them indefinitely. A hot tip for you on this one, if you don't use an expense app to scan and store them, go and do this stat and get rid of those hard copies straight in the recycle bin. We use HubDoc, an online app, for all of our clients because access to that app is included with most Xero plans and it does a lot of the key data entry for us. But there are other options out there, and at a minimum, scan them all into a Dropbox folder or Google or whatever you're using and store them by financial years and in a naming system that you've made easily searchable. And then you don't have to store the hard copies and you're saving them for a long time. When you think about what you need to keep for the ATO, What most business owners don't realize is it's not only expenses you need to keep track of. You need to keep accurate records of all your incoming payments, how much, when, what for, and the like. Payroll also, as we know, it must be run through compliant accounting software, and doing this makes you meet all the rules and regulations on payroll, covering the records you need to keep for you. So now you know what happens when you don't keep accurate records for the ATO. You miss out on deductions, GST claims, and you're in line for some really hefty penalties. Now, there are not only ATO issues if you don't keep the right numbers records. There is the impact on your business overall of messy and inaccurate books. You don't know your numbers, so you don't know if you're running profitably or leaking money through a sieve or a waterfall, as some businesses have found. If you can't measure it, you can't improve it, which is so true from Peter Drucker. And you, of course, always want to grow and improve your business. So you can't be strategic with your business decisions if you're not accurately recording your income. You won't know if a particular area of your business is doing well or not so well. So you can make any decisions on growing particular products or services. You want to keep income and expense information spot on and up to date. So if you want to invest in some training or a new product line, you need to know if you've got the profitability or room there to invest and grow. Now, without keeping a tight ship on the bookkeeping records front, how will you know? Bank balance accounting is not the answer, meaning you can't decide things based on your current bank balance. You might need that cash for payroll or for a BAS bill you didn't realize the amount or remember it was coming up. And now you've wound up in a really tight cash flow position because you didn't keep your eye on the ball and have accurate books. So messy books hits the cash flow as well, not being able to make smart and strategic decisions. And let me take it a step further. If your books are accurate, but only done once a year at tax time, you're not keeping accurate records. You're simply doing your tax once a year. Keeping accurate records is way more than that. It's actually recording things as they happen. And the main point of this one being, without accurate records, you're missing opportunities to grow and invest, to save funds, to be more profitable. So we want accurate records so we can be strategic and protect our cash flow. Thinking back to your expenses, let's imagine you haven't been tracking them and you haven't been keeping a really accurate record. And the prices that things cost you sneak up a little and you think, oh, it's not much, I won't worry about it. But over time, over a matter of months, 6 months, a year, you would be so surprised how fast those little increases and unnoticed expenses add up and totally zap your bottom line or your profit. So you really want to sail a tight ship here in terms of monitoring your expenses, and you can only do this through, yep, you guessed it, accurate records. On the flip side, keeping tabs on your income, making sure it's all allocated correctly and up to date has so much positive impact on your business and your cash flow. It allows you to keep on top of any invoicing mistakes, any outstanding money owed to you, because if you're not recording the payments, it's a bit of a wild guess as to what's overdue, what clients haven't paid you, so you can't really chase up the payments from your customers until your books are in order and accurate. In a nutshell, covering all of those, to keep accurate records, you need to be on accounting software for your financials. And then also, depending on what you're selling, if you need a sales platform like Shopify, if you're in e-commerce, Dubsado for services and creatives, or a point of sale system for retail stores. There are so many different ones. This is so you can keep detailed, accurate records on the other important aspects, like your clients, your stock levels, product statistics, and that's your top sellers, profitability by line item, etc., and so much more than the basics covered in your accounting software, which by the way, is actually totally fine too in most cases. We have a really large group of our clients who only use Xero for their client invoicing, and it's perfect. If you're not sure if it would suit you better to be using a separate sales platform to keep those records in tip-top shape, touch base with your bookkeeper or tax agent who'll be able to review what you're doing with you and give you some really great suggestions. Now, let me be brutally honest with you. Bad record keeping means bad business. I can't put it any other way, because if you want to run a business, this is part of it. There isn't one single large business or enterprise who doesn't have an accounts department keeping their numbers squeaky clean. The business simply would not function if the numbers were not being looked after and accurate records. You might be thinking, oh, but I'm not a big business. This only means you don't need a huge in-house accounts team to support you. It doesn't mean that you don't need to keep the accurate records and do the financy things. You still have to meet all your legal obligations of keeping accurate records, big business or small business. And if you want to move the needle from small to medium or big, you know what I'm going to say, numbers are absolutely a really key part in managing growth, making decisions, paying ATO bills, all the things. They all come back to having accurate records. Summarising slightly the things that we've looked at today, the main issues it would turn out when you don't keep accurate records, you can't claim your expenses or the GST you've paid. If you don't keep accurate records or invoices and receipts for all your purchases, there's no grey area here. You have to keep them. Look into storing them digitally to save some space and save yourself some time as well. It's also not only expenses that you need to keep the details of for your accurate records, it's all your financial transactions, income, payroll, asset purchases, the works. And keeping accurate records of this means using accounting software. If you're not doing this and tracking money in and out accurately, it can't paint the picture for you of your profit or loss and your month-by-month expenses and income and all the beautiful insights you get that comes from keeping accurate bookkeeping records. And lastly, not having those accurate records can hit the business hard, leaving you running it with your eyes closed, not having financial information to make decisions, to grow, to change and evolve your business in whichever direction you're wanting to. And we all want to be able to do this, right? If all this leaves you feeling alarmed or overwhelmed for not keeping accurate records, it's a smooth and easy and fast way to resolve it. You don't need to get super stressed. It isn't a big deal. Get yourself onto accounting software, keep it up to date regularly, and if you can't do this, get the right bookkeeper on board for you and your business. Make sure you catch up on last week's episode covering this. Thanks for tuning in today's episode, making sure you know what happens when you don't keep accurate records. If you want to be sure to keep up to date with important matters to run your business the right way, I would love it if you could leave a 5-star review and hit the follow button. Thanks again, and I can't wait to chat with you next week.